And welcome back. Zillow did it yet again because their latest housing market forecast for home prices is actually an upward revision in their previous forecast. However, they're predicting that home sales are going to decline further over the next 12 months. So in today's video, I'm going to share exactly what they expect will happen to our US housing market over the next 12 months. Cue the intro. That's right. I don't have an intro. Let's go ahead and dive right in. Now, having said that, here's Zillow's housing market predictions over the next 12 months. And they actually start off by saying this disclaimer here. It says, these forecasts do not reflect the recent turmoil in the banking sector and subsequent changes to monetary policy by the Fed, which have introduced fresh uncertainty to the market and, of course, the economy as well. And according to Zillow, elevated competition amongst homebuyers, largely a result of persistently low supply, more on that here in just a little bit, in the US housing market has led Zillow to revise up its outlook for home values over the next 12 months, but also to revise down its expectation for home sales in 2023. In regards to their quote here saying that we have a low amount of houses for sale, I would add an asterisk here because historically speaking, looking at pre-COVID levels, we have a low amount of houses for sale. However, though, compared to the past couple of years, the number of houses for sale right now is much higher compared to what we have right now. According to Realty.com for February, which is just posted a couple weeks ago, there was approximately 68% more houses for sale this February compared to February of 2022. This means there was 234,000 more houses available to buy compared to 1 year ago. However, though, while the number of houses for sale is increasing, it's still 47% fewer compared to pre-COVID levels back in 2017 through 2019 nationwide. Now here's a chart from Realtor.com, which I actually really love because they share 2017 through 2019's levels, and of course, the past few years as well. When looking at the Redfin data center, they only go back to 2020. So we can't really see pre-COVID levels when going onto Redfin's data center here. So again, there's approximately 67.8% more houses for sale in the US right now compared to February of 2022, which is right here. Back in February 2022, there's approximately 350,000. Now there's approximately 578,000. There's also more compared to 2021 as well. Back in 2021, there's approximately 475,000. Now there's 578. Now, when looking at pre-COVID levels, let's just look at 2017, 2018, and 2019. For those years at this time, there was around 1.1 million houses for sale. Now, again, there's only 578,000. So by my dumb math, and also according to Realtor.com as well, there's approximately 47% fewer houses for sale right now compared to pre-COVID levels. So going back to Zillow's report here, because we have a historically low supply of houses for sale right now, that's why Zillow is actually forecasting that home values are actually going to be increasing at a higher rate compared to the previous forecasts. But because we have a low amount of houses for sale, that's why they're revising down their housing market forecast for home sales this year. In regards to their real estate market predictions for home values, here's what they had to say. And by the way, they have what's called their Zillow Home Value Index, or their ZHVI, which is more or less an index based on home values in the US right now. So their index, which rose by 4.4% from February last year to February this year, is expected to flatten out to rise by only 0.6% over the next 12 months. So in other words, they're predicting that home values are only going to increase by 0.6% over the next 12 months. This is actually a slight upward revision in their housing market forecast of a gain of 0.2% that they forecasted last month. So last month, their forecast was a 0.2% increase in values. Now it's an increase of 0.6%. However, though, when looking at December's forecast that was posted on December 20th, at that time, they were predicting that home values were going to decrease by 1.1% from November 2022 through November of 2023. Now, having said that, I know I'm not talking about the same time frames. This forecast right here was from November through November, but this latest housing market forecast, which again was just posted a few days ago, is calling for home values to increase by 0.6%, which of course is an upper revision in their December forecast, calling for a decrease in home values down by 1.1%. Also, according to Zillow, a shortage of new for sale listings, in other words, new listings, is helping to buoy home prices even as elevated interest rates present affordability challenges for buyers. So in regards to the shortage of new listings, take a look at this, because according to Realtor.com for February, the number of newly listed houses for sale declined by 15.9% compared to the same time frame last year. A decrease of new listings down by 16% compared to February of 2022. However, though, new listings remained 27% below pre-pandemic levels in 2017 through 2019. And here's a really good chart showing new listings going back to 2017. So again, for this February, down 15.9% compared to 2022, which is right here. Here's 2022. So the level of new listings right now, there's approximately 312,000 new listings in February this year. Compare this to pre-COVID levels back in 2017, 2018, as well as 2019 here in red. Back then in February of those years, there was actually over 400,000 new listings that hit the market that February for those years. In other words, new listings this year is still down by about 27% compared to levels in 2017 through 2019. And of course, the main reason why we're seeing this lack of new housing supply is due to the fact that people have historically low rates. So according to Black Knight, which is just posted about 3 weeks ago, half of all mortgage houses, in other words, half of all people who have loans on their houses, have rates at or below 3.5%. So approximately half of all people who have loans in their houses, for a first mortgage, of course, have rates at or below 3.5%. Of course, I have a rate at 2.6%. Why would I sell my house and buy a new house at about 6.5% when I have a rate right now at 2.6%? Also, approximately 2/3 or approximately 67% have rates at 4% or lower. So because average rates right now for a 30-year fix for people with great credit is around 6.5% right now, this is one reason why we're not seeing this giant increase of new listings, because people like myself have very, very low rates that we may not see in our lifetime. Therefore, because of this lock-in effect, and a lot of people like myself would rather rent out their houses rather than selling it, because we probably won't see these rates at below 3% for a very, very long time, if ever again. That's why the number of new listings this February is at least a 6-year low for a February. Also, speaking of rates right now, according to the Mortgage News Daily as of today, which is the 27th of March, for people with great credit, of course, average 30-year fix is at 6.54%. For an FHA or a VA loan, that's around 5.9 to 5.95%. And also compared to 1 year ago, average rates around 4.95%. That's an increase of 1.59 percentage points compared to 12 months ago. So because we have this lack of new listings, which is causing housing inventory to be at historically low levels, this is why we're seeing prices actually increase in the US, but of course not at the same rate compared to 2022. In fact, what we're seeing right now is an increase in home prices, which is the seasonality of our housing market, where home prices tend to increase in the spring months. But we're seeing this year is an increase in prices, but not at the same rates we saw back in 2022, as you can see right here. So this is on Redfin's data center regarding home sold prices in the US. So home sold prices are still down by 2% compared to the same time frame in 2022. However, though, prices have been increasing for the past 1 month or so. This is because for the 4 weeks ended February 12th this year, the median sold price in the US was approximately $344,000. Now, for the 4 weeks ended March 19th, it's at $358,000. Zillow also provided the real estate market predictions for home sales of existing houses in 2023 because they're forecasting for 4.3 million existing home sales to be sold this year. To give you guys some context regarding what this 4.3 million forecast, how that compares to previous years, the best way to share that is to have a look at this, because back in 2020, we had 5.6 million existing home sales in the US, according to the National Association of Realtors. In 2021, we had 6.1 million, and last year there was just over 5 million existing home sales in the US. And by the way, the current sales pace right now for February is at 4.58 million on a seasonally adjusted annualized basis. And Zillow right now is calling for 4.3 million for the entire year this year. This also means that Zillow is forecasting for a 14% decrease in home sales this year. Also, compared to 2021, they're forecasting for 30% fewer home sales. So I'd love to hear from you guys. What do you guys think about their housing market forecast calling for home values to increase by 0.6% over the next 12 months? However, a decrease in home sales by about 14% compared to 2022. Please leave me a comment below. Here's my thoughts regarding Zillow's latest housing market forecast. I think they're spot on regarding a decrease in home sales. I really think we're going to see that because we have a lack of houses for sale. And of course, we have this housing affordability issue in the US, which is likely to cause home buying demand to remain at low levels. In regards to the home value forecast, I would have to say it's anyone's guess. In my personal opinion, the direction of our housing market is going to be highly rate dependent. If the Fed decides to pivot later this year and decreases rates, which doesn't seem they're going to do that, but they do, that's likely to cause an increase in home buying demand because mortgage rates will likely fall. However, though, if rates stay at these elevated levels, let's just say at over 6.5%, I would be shocked to see our housing market take off like it did last year. And of course, number 3, it's anyone's guess. And of course, I am not a real estate market fortune teller, and time will tell, and I'll definitely keep you posted. With that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I really appreciate that. Of course, I appreciate you. Hope you guys have an awesome day, and I look forward to seeing you on the next video.